October 2025. The air in Westminster is thick with anticipation as a new political era dawns. The city's iconic landmarks stand as silent witnesses to a pivotal moment for the nation. Chancellor Rachel Reeves steps into the spotlight, preparing to deliver her first major budget. The UK's finances are under severe strain and the eyes of the country are fixed on her every move. The government faces a daunting challenge, raising tens of billions of pounds just to keep essential public services running and to meet strict fiscal rules. Every department is feeling the pressure, from healthcare to education. Reeves must walk a fine line, balancing the urgent need for revenue with the risk of stifling economic growth, or placing too heavy a burden on ordinary households already struggling with rising costs. Every decision she makes will be scrutinized by economists, political opponents, and a public already feeling the pinch of inflation and uncertainty. The media is poised to analyze every detail, and the stakes could not be higher. This budget is more than just numbers on a page. It will set the tone for the government's entire term, testing its ability to lead through economic pressure and deliver on promises of stability and growth. The choices Reeves makes now will echo for years to come, shaping the UK's financial future and defining her legacy as Chancellor. Labour's ambitious election promises now tie Rachel Reeves's hands as she steps into her new role as Chancellor. The party's campaign was built on a foundation of trust, with clear pledges to voters that certain taxes would not rise. These commitments were designed to reassure the public, but they now create a complex web of constraints for the government's economic strategy. Chief among these is the so-called tax lock on income tax, national insurance, and VAT, the three pillars of the UK's tax system. Labour has promised not to increase any of these, limiting the most straightforward ways to raise revenue. Breaking these high-profile pledges would be politically toxic, risking a backlash from voters and damaging Labour's credibility. Yet sticking to them leaves Reeves with very little room to maneuver, especially as economic pressures mount and public services demand more funding. On top of these promises, strict fiscal rules are in place. Reeves cannot borrow for day-to-day spending, and she must ensure that national debt falls as a share of national income. These rules are meant to show fiscal responsibility, but they further tighten the government's options. The Institute for Fiscal Studies warns that while it's technically possible to raise significant money without touching the big three taxes, it's a daunting challenge. The alternatives are limited and often unpopular, making the task even harder. The Treasury must now look to less obvious, more controversial sources of revenue, options that may not be as visible to the public but could still provoke strong reactions. One such option is extending the freeze on income tax thresholds. This so-called stealth tax quietly increases the tax burden as wages rise, and while it doesn't break Labour's explicit promises, it risks undermining the spirit of their commitments to fairness. As Rachel Reeves weighs her options, she faces a series of tough trade-offs, balancing the need to keep her word, maintain public trust, and find enough money to fund vital services, all while keeping the nation's finances on a sustainable path. The Institute for Fiscal Studies urges Reeves to avoid quick fixes and instead pursue bold, principled tax reform. Piecemeal changes may raise cash now but risk distorting the economy and deepening unfairness. The IFS calls for a fairer, more efficient system, taxing similar income in similar ways and closing loopholes. Raising major taxes like corporation tax or fuel duty risks economic disruption, so a smarter approach is needed. The upcoming budget is a chance to lay the groundwork for a stronger, more resilient tax system. The Institute for Fiscal Studies, or IFS, highlights property and capital taxes as areas urgently needing reform in the UK. These taxes, they argue, are not only outdated, but also contribute to growing inequality and inefficiency in the tax system. Take council tax, for example. It's still based on property values from 1991, which means it no longer reflects today's housing market. As a result, owners of less expensive homes end up paying a higher share of their property's value in tax than those living in much pricier homes. This makes the system regressive and unfair, especially for families in lower-value properties. The IFS suggests a major overhaul: revalue all properties to reflect current market prices, and then levy council tax as a percentage of that up-to-date value. This would make the tax system more progressive, ensuring those with more valuable homes contribute a fairer share. In fact, Even if council tax rates on the most expensive properties were simply doubled, the government could raise billions in additional revenue, money that could be used to support vital public services. Stamp duty is another target for reform. The IFS points out that this tax, paid when buying a home, discourages people from moving and distorts the housing market. Replacing it with a reformed annual property tax would encourage mobility and make the system more efficient. Capital gains tax is also in the spotlight. Currently, gains from selling assets are often taxed at lower rates than income from work. Aligning capital gains tax rates with income tax would close loopholes, reduce tax avoidance, and generate significant extra revenue for the government. The IFS also recommends abolishing inheritance tax relief on main homes, a move that could generate billions more and help address wealth inequality between generations. By implementing these targeted reforms to property and capital taxes, the UK could raise substantial funds for public services, like healthcare and education, without breaking election promises or placing undue burden on ordinary families. The IFS warns against a new annual wealth tax, citing complexity and the risk of driving wealth abroad. They also caution against restricting pension tax relief, which could discourage saving and create unfairness. Instead, reforming the tax-free lump sum from pensions could raise revenue with fewer negative side effects. The IFS's message: avoid stealth taxes and piecemeal fixes. Focus on principled reforms, especially to property and capital taxes, to raise funds, enhance fairness and support growth. Reeves stands at a crossroads: bold reform or short-term fixes. The path she chooses will define her legacy.